Did you know that the stock market that we know today has its roots dating back to the 17th century? Quite the surprise, isn't it? This complex global financial system that we've come to associate with Wall Street and Silicon Valley began in a far simpler time and place. The year was 1602, and the place? The Netherlands. It was here that the Dutch East India Company, a pioneering multinational corporation, came up with an ingenious idea to finance their overseas ventures. They issued shares of their company, essentially selling a piece of their enterprise to the public. This was the birth of what we now call stocks. This revolutionary concept allowed the Dutch East India Company to amass vast wealth, and in turn it offered everyday individuals a chance to invest in and profit from the company's ventures. So, here we are centuries later, still playing by the rules set down by a Dutch trading company. That's right, the stock market has been influencing economies for centuries. The first stock exchange, as we understand it today, was actually established in Antwerp, Belgium, in 1531. Now that's a fact that might surprise you. This was not a stock exchange in the way we think of it today, with electronic trading and stock tickers. Instead, it was a place where merchants could meet to handle their business affairs and trade securities. From there, the concept of a centralized place for trading securities began to spread. By the late 16th century, London had its own form of a stock exchange, with the Royal Exchange acting as the hub of commerce and trade. However, it wasn't until the formation of the London Stock Exchange in 1773 that we saw the birth of a stock exchange that closely resembles what we think of today. But the story doesn't stop there. Across the Atlantic, the New York Stock Exchange was founded in 1792 under a buttonwood tree on Wall Street. The NYSE, as it's known, was established with the signing of the Buttonwood Agreement by 24 New York City stockbrokers and merchants. This agreement was the spark that ignited the evolution of the modern-day stock market. The role of these early stock exchanges cannot be overstated. They provided a centralized place for investors to buy and sell securities, which in turn helped to fuel economic growth and development. These exchanges became the lifeblood of the global economy, facilitating the flow of capital from investors to companies. They allowed businesses to raise the money needed for expansion, leading to job creation and further economic development. As time went on, stock exchanges played an increasingly important role in shaping the world economy. Today, they are the heart of the global financial system, with billions of dollars worth of stocks and other securities traded daily. So, from the humble beginnings in Antwerp, through the bustling trading floors in London and New York, stock exchanges have come a long way. They've evolved from simple meeting places for merchants to complex electronic trading platforms that connect investors and companies from around the world. From Antwerp to New York, stock exchanges have been shaping the global economy for centuries, and they'll continue to do so for many more to come. The stock market is not just about growth, it has had its fair share of crashes too. It's a roller coaster ride of highs and lows, and some of the lows have been downright terrifying. Let's take a trip back in time and examine some of these monumental crashes. First, we journey back to the end of the Roaring '20s, to the Wall Street crash of 1929, a disaster that signaled the start of the Great Depression. Overconfidence and speculation ran rampant, creating a bubble that eventually burst. Stock prices plummeted, fortunes evaporated overnight, and the world was plunged into economic turmoil that lasted for more than a decade. Fast forward to Black Monday, October 19, 1987. The stock market experienced its largest one-day percentage decline in history. The reasons behind this dramatic plunge remain somewhat murky, but factors like high-speed computerized trading and global economic issues certainly played a part. The crash sent shockwaves around the world, causing panic and uncertainty. Our next stop is the global financial crisis of 2008. Triggered by the subprime mortgage bubble in the United States, this devastating crash shook the world's financial systems to their core. Banks collapsed, stock markets crashed, and millions of people lost their homes and their jobs. The impact was so severe that it took years for economies around the world to recover. Each of these crashes had unique causes, whether it be rampant speculation, computerized trading, or a housing bubble. But they all share a common thread. They serve as stark reminders of the inherent risks in investing. They remind us that while the stock market can bring great rewards, it can also bring great losses. These crashes have shaped the financial landscape, leading to new regulations and a greater understanding of economic cycles. And while the impacts were severe, it's important to remember that in each case, the stock market eventually recovered and even grew stronger. As history shows, the stock market can be a risky business, but it's also a resilient one, capable of bouncing back from even the most severe setbacks. After all, risk and reward are two sides of the same coin in the world of investing. From trading under a buttonwood tree to digital trading platforms, the way stocks are traded has evolved over time. The first stock exchange, the Amsterdam Stock Exchange, was established in the late 16th century, but the method of trading shares was far from what we know today. Buyers and sellers would gather in physical locations, a system known as open outcry, where they would shout their buy or sell orders. This method was both chaotic and inefficient, but it was the best system available at the time. Then, in the late 19th century, telegraph technology allowed orders to be transmitted quickly over long distances, and the ticker tape machine was invented. This machine printed the latest prices onto a narrow strip of paper, or ticker tape, allowing investors to get real-time information. Fast forward to the mid-20th century, and the rise of computers started to change everything. In the 70s, the New York Stock Exchange introduced its designated order turnaround system, which electronically routed orders to the trading floor. This was the beginning of the end for the open outcry system. By the end of the 20th century, the internet had fundamentally changed stock trading. Online trading platforms allowed anyone with an internet connection to trade stocks from the comfort of their own home. The advent of digital trading platforms not only made trading more efficient but also more accessible. The impact of technology on stock trading has been profound. High-frequency trading, which uses complex algorithms to execute trades in milliseconds, now accounts for a significant portion of all trades. Artificial intelligence and machine learning are being used to predict market trends and make trading decisions. The democratization of stock trading has also been a major development. Today, anyone with a smartphone can trade stocks, thanks to apps that allow commission-free trades. This has opened up the world of stock trading to a whole new demographic. In conclusion, the evolution of stock trading has been driven by advancements in technology, making trading more efficient, accessible, and democratic. Technology has truly revolutionized how we trade stocks. Today, the stock market has become a vital part of the global economy. It is the pulse, the heartbeat that sends ripples across nations and industries. It's a complex system where billions of dollars exchange hands every day, and it's where companies, big and small, come to raise capital to fuel their growth and innovation. The stock market not only influences businesses, but also impacts individuals. It provides an avenue for people to invest their savings, to participate in the growth of businesses, and to build wealth over time. It's a fascinating dance of numbers, a constant cycle of boom and bust, shaped by a myriad of factors from geopolitical events to technological advancements. Speaking of advancements, let's take a peek into the future, shall we? One of the key trends shaping the stock market is algorithmic trading. This involves the use of complex AI systems to make lightning-fast trades, leveraging minuscule price differences for profit. It's like having a supercomputer playing chess on the global financial board. And then we have artificial intelligence itself. AI is not only used in trading but also in predicting market trends. Machine learning models crunch vast amounts of data to forecast stock price movements, helping investors make more informed decisions. It's like having a crystal ball, powered by terabytes of data and sophisticated algorithms. Another trend to watch is the blockchain. Yes, the technology behind cryptocurrencies. Blockchain holds the potential to revolutionize the stock market by making transactions more secure, transparent, and efficient. Imagine a world where stock trades are settled instantly, without the need for intermediaries. That's the promise of blockchain. So, as we stand on the precipice of this exciting future, one thing is clear: the stock market, as we know it, is evolving. It's becoming more digital, more automated, and more data-driven. It's a brave new world, full of opportunities and challenges. The future of the stock market looks promising, with new technologies and trends shaping its evolution. The stock market has come a long way from its humble beginnings. From the birth of stock exchanges in the 17th century, it has grown into a global phenomenon that influences economies and lives alike. We've journeyed through its rich history, witnessing its highs and lows, from major crashes that shook the world to the evolution of stock trading. We've seen how the stock market has transformed over time, from physical trading floors filled with brokers shouting out orders, to sophisticated digital platforms that have made trading accessible to anyone with an internet connection. We've touched upon the present-day stock market, where technology and data have become key players, driving new trends like algorithmic trading and robo-advisors. As we look into the future, the stock market continues to be a space of innovation and change. As the stock market continues to evolve, it will continue to play a vital role in our economy and our lives.